Hi everyone, we have some important news and forecast for you, so watch this video till the end. With a one-day delay, the US stock market responded to the Fed's announcements about monetary tightening. The key stock indexes opened with a growth yesterday, but lost all gains closing the New York session. The best-performing high-tech stocks incurred the biggest losses. The Nasdaq tumbled by 2.5%. Traditional stocks in the Dow Jones stayed afloat and closed with a 0.1% uptick. Moreover, they served as a shelter for some investors. Stock buyers recognized a good opportunity to exit the market at a one-year peak a week before Christmas. The S&P 500 opened in the green yesterday, touching the highest level of the year. However, it shed almost 1% closing the session. Today, futures on the S&P are trading lower, currently at new 4,645 points. The indicator of the stock market health is expected to hold in the corridor between 4,630 and 4,700 points. Analysts predicted that we could see sharp swings up and down on Wall Street during the week before Christmas. The economic calendar could act as a market catalyst. For example, US unemployment claims released yesterday extended a downtrend. Besides, continuing jobless claims also went down. On the plus side, the boom in the home building industry is still going on. The number of housing starts increased in November to 1.679 million units. Meanwhile, the US dollar index slipped yesterday. Analysts say its further growth remains an open question. The Bank of England was the first among global central banks to raise interest rates. The key policy rate was sharply increased by 25 basis points. This drastic move triggered an advance of the pound sterling. Besides, the euro also regained its footing yesterday. Perhaps the market expected more hawkish rhetoric from the Federal Reserve on Wednesday. The US dollar index is trading at near 96 points. The expected corridor is seen between 95 and 60 and 96 and 20. The USD card pair is trading at about 1.2790. The currency pair is at a crossroads on the back of a decline in oil prices and the weaker greenback. The trading instrument has got stuck in a range between 1.2700 and 1.2860, awaiting some clarity in market sentiment on the US dollar and crude oil. The crypto market is trading under the same conditions. It's wound down by selling pressure. Bitcoin is trading sideways, being trapped in the range that has been formed in the last 12 days. The flagship cryptocurrency closed yesterday with a 2.5% fall following a turbulent session in light of the crucial news. Volatility ebbed away and Bitcoin began drifting downwards. The chart reveals resistance coinciding with a bearish trend line that pushed the price down to $47,000. Analysts project Bitcoin to correct upwards and return to the current range. Our analysts suppose that in the run-up to Christmas, large investors will venture into long positions only after a steep drop on Wall Street. Indeed, soaring inflation remains the major headwind for the American and global economies. The US CPI surged to 6.8% in November, the highest level in 4 decades. Inflation jumped to such historic peaks as a result of humongous cash injections in the economy. Thanks you for watching. Welcome to share your viewpoint in the comments and see you again very soon. We wish you profitable trading and have a nice weekend.